Hello, everyone. It's great to see you all, and thank you for taking the time to be at our Smart Women Savvy Money webinars because all women are smart. We are multitaskers. That's why we're so smart. But our intention here is to make sure that you get smart about getting your financial life in gear. I'm Renee Norris, and I see the folks that are here. I know we have some people that signed up that wouldn't know who I am, and our clients. We will, not clients, we will be, of course, we always record our sessions, so you always have the ability to hear the sessions, not only the current ones, but the ones in the past. As a matter of fact, what I will do is just to share my screen. If you haven't been into our website before, you will see all of the activities and the things that we do and the content that we provide you based on what we believe is the most important element of your life. As you can see, we do say that we specialize in working with women and for women, not at the exclusion of men. And that's why we want to make sure we have pictures of men in there too. But because women have been underserved and overlooked, we want to make sure that we are taking care of our women. With that said, when you go to the bottom of our page here, you can see who we are and what we do. In addition to that, we have a ton of content that is relevant to your lifestyle. Our Smart Women Savvy Money page, we have a Facebook page. If you become a member of that, there is no cost for that, but it will keep you apprised of all of the activities that we're doing. As a matter of fact, we are going to begin very shortly supporting women, professionals, and business owners on our Smart Women Savvy Money page. And so we will be sending out a template to ask you to tell us what your specialty is, and we will make sure that we promote it on that Facebook page so that other people will step in and do business with you. Because we really are all about supporting women in all stages as much as possible. On our Smart Women Savvy Money page, here you'll be able to see a variety of activities. Obviously, what our current topic is going to be, which we'll get into here in just a couple of seconds, and minutes. But also, you'll be able to see what the previous ones have been by just clicking on this, because we have all of the recordings. Next month, we're really happy to also share with you, we're going to be talking about how you can get cyber secure, because we know so many people have been slammed and scammed based on all the activities that we have seen this year in emails, in your bank accounts, on your phones, on your text apps, on your phones too. So there's going to be a great conversation about what you should do and continue to take care of yourself on an ongoing basis. So be sure to sign up for that. Our webinars are hosted on the last Thursday of every month, except for December, because we know we're all busy, busy ladies. And also because the last Thursday of November is Thanksgiving, we're changing the date to November 18th. So be sure to sign up for that, to make sure that you learn what you need to know about protecting yourself and your family. Next, give you an overview of who and what this topic is today, which is reverse mortgage. Very happy to introduce you to Janice Cohen, who has worked with Urban Wealth Management for how many years now? Probably 5-6 years?
I think so, yeah.
Yeah. And she has worked with a variety of my clients over the years. And interestingly enough, the majority of them are women. And the reason why is because women live longer. We know that, yes, we live longer, but the other key components and reasons why to consider reverse mortgages is because if you don't feel that you have sufficient retirement resources available, you can use your real estate to provide you with a backup plan. Now, we know still to this day, women only earn about 85, 86% of what men earn. We take time off to have our children, to raise kids, take care of family members. We're not working the full time. So when you get all of that going for you and you're not bringing in enough money for your retirement, that's a problem. And in addition to that, we have, of course, fewer resources. We know we live longer. More than 2/3 of Americans aged 85 and older are women. So you want to make sure that you have sufficient assets. With that said, let me turn it over to Janice and let her go into how and what you need to know about reverse mortgages. They don't reverse your life, they can advance your life. All right, Janice.
I want to thank you. Thank you so much, Renee, for inviting me back again. So I always am so happy to join your group and to talk about something that I really feel passionately about. Can everyone see my screen now? Okay, great. So I, just a little bit about me. I have been a reverse mortgage specialist for 16 years now. I used to be a teacher. So I really do try to meet people where they are in terms of explaining what I believe and I know to be a very complex topic. I like to try to explain things in a way that will really empower people to make the right decision for themselves. We call the reverse mortgage the Swiss Army knife of retirement planning because it can be used for so many different aspects of life, of retirement, of aging. And we'll talk a little bit more about that as we go through the presentation. But I did want to say that I am an employee of Mutual of Omaha Mortgage. And when I was growing up, I'm 58 years old. When I was growing up, every Sunday night, in addition to watching The Wonderful World of Disney, I used to watch Mutual of Omaha Wild Kingdom. So I was super excited when our company was acquired by Mutual of Omaha several years ago. So this is going to be an overview of reverse mortgages. I'm going to give general information, and I am happy to discuss with each of you or any of you who have specific questions. We can meet either on Zoom or on the phone and talk about what your questions are. So what is a reverse mortgage? It is a loan that allows people 62 and over to convert some of the equity from their home into tax-free cash. I want to say that just Monday, a new reverse mortgage program rolled out that allows people 55 and older to use the reverse mortgage. It may make sense for some people and it may not make sense for others. The older you are right now, the higher the loan proceeds you can expect. A 55-year-old is going to be able to borrow a little bit less than someone who's 62. But someone who does a reverse mortgage is planning to continue to live in your home. If people are thinking, well, maybe I won't stay here forever, but maybe I'll rent out the house at some point when I don't want to live here anymore, might not be the best application of a reverse mortgage because it does have to be your primary residence. When you get the proceeds of a reverse mortgage, they can be taken as a lump sum of cash or a line of credit. Some people take monthly income, or you can do a combination of those. So if you wanted, say, $20,000 for home improvements and you wanted the rest in monthly income, we can always, do some fancy footwork and work out the right mathematics that'll be most advantageous to you. Most reverse mortgages are government insured, and they are called home equity conversion mortgage, or HECMs. The program that is now available to people 55 and over is not a government insured program. However, it has all of the same protections that the government insured program has. And I have to say, reverse mortgages are among the most closely regulated financial programs in the nation because they're designed for a population that we want to protect, and that's seniors, people over 62. Whether you feel like a senior or not, if you're over 62, you fall into a category of people that we want to protect. So I want to talk a little bit, because actually Renee and I were discussing this just the other day. I want to talk about how reverse mortgages have changed over the years. Now, when I first started in this industry in 2005, I didn't know what I didn't know, but I will tell you that I saw very quickly that there were reputational issues with reverse mortgages. People thought that their houses were going to be taken away. There were all kinds of problems. And a lot of the questions that I would receive came from people who heard from their hairdresser's college roommate, oh, they're going to take your house. So I wanted to talk about some of the improvements that have been made to reverse mortgages to protect consumers. I want to say from the outset that it was as true back then as it is today, that no one is going to take your home and that your home is yours until the day that you leave that home permanently. But I want to say that 3 important things happened in 2015 to help improve the reverse mortgage, to make it more advantageous for borrowers, to protect borrowers, and also to enhance the reputation of reverse mortgages. So one is financial assessment. It used to be that we would lend to just about anyone. And nowadays, we always make sure that the person who's going to borrow on a reverse mortgage has the capacity to make their utility payments, their homeowners insurance payments, their real estate tax payments. We do not want to see anyone fail with this program. We want to see success. And the best chance of success is for us to take a look at the credit of the borrower, a history of their financial responsibility, and then we are able to know if this is a person for whom this program will lead to success. Better protection of home equity. It used to be before the mortgage crisis, we used to lend sometimes up to 75% of the appraised value of the house to a borrower. We kind of pulled back a little bit on that. So people maybe can borrow 60% of the appraised value. And it helps people, again, to be successful within the program. Because if there should be a slight correction in the real estate market, it won't be devastating to our borrowers, right? We want people to always feel like they have an interest in their home. We want them to always have equity in their home. And then protection of spousal interest. It used to be if a person were married to someone younger than they were, and something were to happen to the borrower of the reverse mortgage, the spouse would have about a year before they would need to make arrangements to leave the house because the loan was going to become due and payable. Nowadays, if a person is married and their older spouse does a reverse mortgage on their home, the younger spouse has lifetime rights to remain in the home. So that's fantastic. So how is a reverse mortgage different than a traditional mortgage? Well, unlike a traditional mortgage or a home equity loan, as we already said, it's only available to homeowners or home buyers 62 and over. There are no monthly mortgage payments that are expected or required. You will continue to pay for your property taxes and your homeowner's insurance. And there are some people who make a choice to make mortgage payments, just maybe to prevent their loan balance from growing. Because keep in mind, if you're not making payments, which is perfectly fine, the interest will be folded back into your mortgage balance. So rather than having a shrinking loan balance, like some people who are making payments, your loan balance is going to be increasing a little bit every month. So as long as the terms of the loan are met, a reverse mortgage does not have to be repaid until the last surviving borrower no longer lives in the home as their primary residence or the house is sold. You know, a lot of people have asked me over the years, well, what if I just make the decision to sell my house? Do I have to get permission from the lender? And the answer is no. Just like with any mortgage, you are free to sell the house and move to another home or into an apartment or whatever scenario works for you whenever you please. You are not beholden to the lender. You don't have to, obviously, if you're selling, they're going to get that mortgage paid off through the proceeds of the sale, but you don't need permission. So what makes a borrower eligible? So as we already said, you have to be 62 or over, live in the home as your primary residence. Some people own the property outright, or they have a lot of equity. What is considered a lot of equity? Well, if you live in a house that's, say, $400,000, you can owe, I would say, around $200,000. If a person were in that situation where they had a $400,000 house and they owe $200,000, in most cases, we're going to be able to get their mortgage paid off and maybe give them a little bit, depending on their age, maybe give them a little bit of cash in addition. But the main objective that we would be meeting by doing the reverse mortgage, where about 50% equity in the home, is we're going to be able to pay off that mortgage so that the person would no longer have mortgage payments. So you can't be delinquent on any federal debt. What does that mean? Well, I have a borrower right now who is working with his tax attorney to get releases on some IRS liens. That's one thing. But mostly women, and women in my age group who have children who've gone away to college, sometimes women will co-sign for their children on a student loan, which is a very generous thing to do. It is considered a federal debt. And if your child defaults on that student loan, guess who is going to be affected by that? We will. As co-signers, we're as good as the borrower on that student loan. So if you're a loving mother, which I'm sure every mother in this room is a loving mother who wants to do only the best for their child, but think twice about co-signing for student loans because it can affect your ability to borrow in the future. Another aspect of eligibility for the reverse mortgage is that every person who applies for a reverse mortgage participates in a consumer information session held by an independent counselor of the Department of Housing and Urban Development. And that's done on the phone. That's done individually, just the borrower and the counselor. It takes about 45 minutes. So how you use your reverse mortgage proceeds is up to you. Some of the most common uses are to pay off existing mortgage or other debt to improve cash flow. Some people find if they get that mortgage paid off, they'll have maybe another $1,200 in their pocket every month, which can make a very big difference. So it can give people breathing room that they really want to have and maybe don't have right now. You can make home repairs or improvements. All of us see commercials for granite countertops, stainless steel appliances, we kind of have these standards now in our minds of how we want our kitchens to look, our bathrooms to look. We want double pane windows. We want to protect our biggest investment that we have in our lives, which is our home. Makes total sense. Some people want to get medical bills paid off. I was just telling Renee, I recently funded a reverse mortgage. It was actually during the month of October for a lady who was 109 years old. Amazing. Well, guess what? She needs in-home care. She needs 24/7 care. Imagine getting in and out of bed at 109 is a feat of amazement. So she has a health companion, home companion who lives with her. And that is a very expensive undertaking. You can use proceeds to supplement monthly income with a steady stream of funds. I have a conversation with my clients. Are you short $1,200 a month? Are you short $700 a month? Maybe you're short every month by $400. Whatever it is, let's try to fill that gap. Some people use a reverse mortgage to buy a home. We can talk a little more about that later. Some people like to create a standby cash reserve. When a person opens a reverse mortgage line of credit, that line of credit can be emergency money. Emergency money for any of the purposes that we kind of talked about: home repairs, medical bills. It's nice to have an emergency fund. Not everybody has that. We use reverse mortgages as a retirement planning tool in a variety of ways. Financial advisors are helping their clients integrate this into a financial plan to improve cash flow. Once you stop working and you're on a fixed income, you want to be able to increase your monthly income without diminishing your timeline. We want to all live long, healthy lives. How can we maximize our monthly income? And how can we leave our invested assets under management and not have to take them out prematurely to live on? We don't want to leave ourselves with nothing. A lot of people like to delay collecting Social Security. As Renee just said, women live longer. We, of all people, need to delay collecting Social Security so that we can receive a larger monthly benefit for the rest of our lives. And it is truly amazing to see how much more money you will be eligible to borrow over your lifetime if you delay and try to start collecting later. You can use the standby line of credit that we just talked about to tap into it strategically. Sometimes if investments are underperforming and we don't want to pull out money, or we can use it strategically to buy a car if you need a new car and your car is old and needing a lot of repairs. Or you can use the proceeds to purchase a home that better fits your lifestyle without taking on monthly mortgage payments. So just to give you an idea, if you do think about leaving your home and going to a home that you feel would suit you better, what you would need to look at if you're using the reverse mortgage to purchase a home is you're going to be putting down approximately 50% of the purchase price of the home, and the other 50% would be financed into a reverse mortgage. It's a lot to explain, but maybe one day we'll do a talk just about purchasing a home with reverse mortgages. So the HECM product options, again, HECM is Home Equity Conversion Mortgage. You can go with a fixed rate, an adjustable rate, and there are benefits and drawbacks to each of those. Proceeds can be taken as a lump sum, a line of credit, monthly advances. You can take those monthly advances for as long as you live in your home, or you can take them for 10 years if you feel like, gee, I'm going to start taking my Social Security a little bit later. Maybe you take it for 7 years. It all depends. And the upfront costs can be reduced by taking a lower amount of the proceeds that are available to you. And as we mentioned, the HECM for purchase can be used to buy a new home. Borrower protections. As we said, this is a federally insured loan. So what does that mean? Well, I'll paint a little picture of what this means for you. One of my very first clients when I started in this industry in 2005, when we did her reverse mortgage, her home was worth $400,000. As I mentioned, we were lending a very large portion of the value of the home, and we lent her $300,000. Well, after the mortgage crisis, her home was worth, believe it or not, only about $250,000. This was back in New Jersey when I first began my career. So the house value went down significantly. It actually went down lower than the loan balance. So when she left her house permanently, her heirs, neither she nor her heirs had to bring any funds to make the mortgage whole. Her house got sold. There was a gap between what she owed and the proceeds of the sale of her home. And that gap was filled by the HUD insurance that is part of a reverse mortgage. So no debt will ever be passed down to your heirs should your home go underwater, which if you live until 109 years old, the longer you live, the higher the chance that you could outlive the value of your reverse mortgage, which could be a good thing because it's covered by insurance. So why not a traditional home equity line of credit? You know, all of us have bank accounts at banks. We get ads in the mail. Hey, you can access a line of credit and very low rate. And that's true. But a home equity line of credit can be called, can be canceled, can be decreased if the financial environment changes. We saw that happen several years ago. People were receiving letters in the mail saying, we're cutting off your borrowing power. That can never happen with a reverse mortgage line of credit. In fact, when you have a reverse mortgage line of credit, you have it for the rest of your life as long as you're in the house. And that line of credit is going to increase every year at the same rate that borrowed money would be charged interest. So this is very important to know. So I personally, for someone 62 or over, I like a reverse mortgage. Unless you feel like you only need the money for a short period of time, then a HELOC might be a good solution for you. Okay. Okay, are you seeing another page, Renee? I'm seeing just a blank screen. Okay.
Here we go.
Oh, I wonder. Okay. Oh, you know what? That was the end of my presentation. That's why that happened. You know, I feel very passionately about reverse mortgage. I'm going to stop sharing my screen so that I can. There we go.
Sure.
I feel very passionately about reverse mortgages. But I don't say to everyone, oh, this is going to be perfect for you. People who are not planning to remain in their homes for very long, I would say to that person, you know, it may not make sense because there are costs involved in getting into a reverse mortgage that may not be worthwhile for you if you're only going to keep it for a year. So that would be someone that I would say, if you only need the money for a short period of time, go to your bank and get a HELOC. That might be a better option for you. But I will say, I have seen people's lives really, really their quality of life improved by doing the reverse mortgage, and no more, you know, uh, I've seen, I think the best example that I've seen of a just a turnaround in quality of life is for a family who's been trying to care for someone at home who needs either care every day by a home companion or 24/7 care. And their lives have been transformed. The family's lives have been transformed because as much as we love our family members who need the care, it's very uncomfortable to perform some of the more intimate tasks of caring for someone who's aging. And it's nice to, especially if it's a parent of the opposite sex. So to be able to have someone come in, even if it's for a few hours a day, help your dad have a shower and get dressed and or get him into pajamas, it's empowering as a daughter not to have to be directly involved with that. But for women who are living in their homes and wanting to just have some peace of mind of having a line of credit, that can be just as life-changing. How many women and how many people do I meet that say, I really haven't had a good night's sleep in a few years because I worry about money? I had one lady say to me, I have family that are having a family reunion in Northern California. I live in Los Angeles, and I'm not going because I'm concerned about the gas cost. That's so sad to me that someone would pass up an opportunity to see their relatives, to be at a family reunion because the gas is expensive and they're concerned it's going to cut into their carefully balanced budget. So there are just so many nuanced ways that this can really improve quality of life.
Absolutely. And that's what I posted. A lot of people think it's reverse, but it can increase the quality of life. As an example, for this year, Janice has helped 3 of my clients, and one of them was a client, has been a client for 25 years, husband. We live in Washington, and ironically, the wife reached out to me back in July and said, my husband has really been having a lot of healthcare issues. We've been pulling really all of our money from the retirement account, and they were down to just a few $1,000s based on the amount they had to come out. So she said, we're thinking about selling the house. I said, but you bought it 30 years ago, 20 years ago, you're going to have a huge capital gains. And so I said, consider a reverse mortgage. So they did. I connected them with Janice. The deal closed in September. It was closed last month. And 2 weeks after it closed, the husband died. The wife, of course, was very upset about all of this. But the fact is that there were several $100,000 that is now available to her to take care of her going forward. She's still in good shape so far, but I'm sure that this is going to create a mental state and the recognition. And they have a son that's cray-cray. So they can't have that son to step in and take care of them. So she has to hire somebody to come in and do this. Another client, I call her like my mom. She was my mom's best friend. She just turned 97. And that deal went through. She got what, about 80-90% of her?
She got a very, very high percentage of her home value,
Yeah.
which her home value came in, I think, much higher than she expected. Because right now, the real estate market is so high and people are fighting over houses and they're paying more than, what the house, what the estimate is. So it's pushing up the values, and the appraisals are coming in so much higher than what we anticipate. So we're able to lend more, and it's making even a bigger difference for folks.
Sure, absolutely. So we have a question here. Do you suggest paying down on a reverse mortgage you will be inheriting?
Well, that's an interesting question. Um, I would say it depends on what you feel the timeline would be. If if you still have parents that are living in the house, um, you can do this, and I actually, if you're in a position to do it, I think it's a terrific idea. If you have the closing papers from when your folks did the reverse, look at their most recent statements. I would encourage you to look at the statements every month. Pay off the interest only. Use it as an interest only loan. But I would also suggest, if you have siblings, do you have siblings?
I do, but they're not part of the trust.
Okay, so you're the sole beneficiary of the trust.
Yes.
So in that case, what you would be doing by making this an interest only loan is you're preventing the interest from compounding. And in doing that, you're doing two things. You're paying down the balance, which is great. You're preventing the interest from compounding, which is great. But even a third benefit is you're increasing the line of credit should something catastrophic happen and you need to access additional funds. You will be able to do that for having paid down the balance a little bit. Because every payment that you make not only pays down the balance, but it increases your line of credit.
Correct. Okay.
Which, if your mom is there or dad, and none of us knows what the future holds, I hope they're healthy, indefinitely. But we all know that can change on a dime. So I do think if you are in a position to make payments on an existing reverse mortgage, and if you are the sole beneficiary, absolutely do it. Okay. I would say to you, and this will be a little illustration, if you were inheriting, or if anyone were inheriting a home with a reverse mortgage on it, and there are 3 kids in the family, all of whom are equal beneficiaries, if you start making payments and they don't, you're funding their inheritance, which you may or may not want to do. I personally wouldn't want to fund my brother's inheritance, but maybe you want to fund your brother's inheritance. I don't know.
No.
Yeah,
I'm with you.
So. I wouldn't think so.
All right. Does anyone else have any questions? Well, in the case where, let's say, someone does just pass away, and it's a single person that's in the home and they've left it, is there a certain period of time in which the beneficiaries would have to make a decision about what to do, if they're going to sell it or keep it? And I know that the rules have changed quite a bit in the last 10 years. And you just said something major just happened just on Monday. It's constantly changing in the reverse mortgage area. So is there a certain timeline where the inheritors would have to make a decision if they're going to keep it, sell it, pay it off, whatever?
It's a great question. And a lot of people ask this particular question, especially if the children are involved with the parents making this decision. So initially, you have 6 months to make final arrangements for the house. So if you're going to sell the house, you have 6 months to get it listed, sold, on the market, what have you. If you are having any difficulty selling the house and it's on the MLS, which is the multiple listing service, you may be able to get 2 90-day extensions. Now, the first extension you can get fairly easily. You reach out to the servicer and you say, listen, we've had the house on the market. We feel that it's fairly priced. We hired a realtor, but it's not selling. My mother insisted on having avocado shag carpet through the house and, harvest orange appliances, and nobody wants the house. So whatever the case may be, you can have 90 days. And then for the second 90-day extension, you really have to have a compelling reason. Like, the house is going through probate. We really need this additional time. My brother is contesting the trust, whatever the case may be. You have to have a compelling reason. You have to show evidence. If there is a lawsuit, if there are legal issues, you're probably going to have to fax a copy of the motion to whatever over to the servicer, but you can get that second 90 days. So you really have about a year to get that mortgage paid off.
Okay.
Initially 6 months.
Okay. All right. Another question. A person that does have a reverse mortgage says that she's never borrowed, but is it possible to withdraw from it?
Absolutely. If you have an FHA reverse mortgage, that money will be there for you for the rest of your life as long as you're in the house. And if you've never borrowed from it, you have probably been watching your mortgage, your line of credit balance increasing every month, because the line of credit grows each month at the same rate that borrowed money would be charged interest. So if your rate of interest is 3.5%, your line of credit is growing each year by 3.5%, which is fantastic.
And if the value of your house, though, has appreciated since you originally took out the reverse mortgage, it's up now 200, 300,000. You can go back and get that revitalized.
Well, you may be able to do a refinance. I've been doing many refinances this year because people's homes have increased in value so much. Yeah. So that's one option. Another option is if a person does have that line of credit that they haven't tapped into, that line of credit is going to be very, very potent because it's been growing over time. People do need to look and see what is their line of credit balance. That can be a great benefit. But yes, it can be refinanced if the circumstances are right. And that is, the value of the home has increased and the interest rates are down, so that the lower the rates, the more funds we can lend. So yes, there are two ways of getting more money after several years.
Awesome. All right. Well, we're at our 5:17 as opposed to 5:15. Does anybody else have any questions? We will be sending out the recording, and Janice's contact information will be on the PowerPoint that you will see, so that if you want to reach out to her to ask her any questions about anything, she is awesome about it, because the people that I've referred to her over the last 6-7 years, she'll even tell them, no, it would be better for you to get a HELOC. No, you need to wait till this happens. And they are so impressed with it because she's not a sales-oriented person. She really cares about who you are on a personal basis. So with that said, I want to thank all of you for being here today. And hopefully you will be coming in there for next week, because we need to be cyber secure and learn how we can protect ourselves because of all this craziness that's going on right now with the cybersecurity piece. I would appreciate your input also. And thank you very much for being on and taking the time with this, because we're all busy ladies and multitaskers. So thank you much. And thank you so much, Janice, for your insight, as always, giving us the ideas about what to do and how.
Thank you for having me, Renee. I love talking to your savvy women.
Absolutely, because we're smart women.
Oh, yeah. And I did want to say to all of you, please feel free. If more questions come up for you, I will be happy to answer. I understand I'm not sure of your name. I know you're Orange County Conservation, but happy to answer anything. Certainly whether you're in California or whether you're in another state. I know you're Orange County, but but it could be Orange County, Florida. But happy to answer any questions that you have specific to your situation.